Guys, good morning. Today I want to talk about, well, good afternoon, good night. I'm not sure when you're catching this. But today I want to talk to you about, should you invest in Bitcoin? Should you invest in cash? Or should you invest in property? Those three things, and what are the risks? If that sounds good, give the like button a nice little strong press for a Friday. Become part of the community. Make sure you subscribe. Make sure you comment. Let me know who you are, where you're tuning in from, and what you think of what I'm saying. And as always, if you have any questions, stick them in the comments, because I'll be delighted to answer them once I check out this video later. So if you've we're just going to talk about three asset classes: Bitcoin, cash, and property. And we're going to talk about the risk of investing into all three of them. I'm going to start with cash, because that's the easy one. So investing into cash is basically what I've done for the first half of my life. When I was poor and I didn't understand how money works, I thought rich people just had loads of money. And to me, money was cash. Money was euros in the bank. So therefore, my investment will be just to accumulate euros in the bank. I now know and understand that cash is the worst type of investment, because it's an asset that goes down in value over time. Now, if you're trying to get ahead, you're trying to find assets that go up in value over time, not assets that go down in value over time. When you're holding an asset that goes down in value over time, that means you're losing money. You're accumulating something that's going down in value, okay? So you're working to fill a bucket, and the bucket has a big hole in it, and the value is draining out. That's what accumulating cash is. So what's the risk in holding cash? Well, as long as all the data shows us that cash loses about half its value every 10 years. So therefore, if I have 10 grand today and I'm going to invest it for my future, in 10 years time, that 10 grand will buy me 5 grand's worth of stuff. So I lose 50% of the purchasing power. You see, how people are fooled is you still have the 10 grand, but everything costs more. Now, if you're not sure about that, look around. You'll notice that the cost of living has pretty much doubled in 4 years. Pretty much doubled. So your cash has lost a lot more than 50% of its value in a decade. But that's the best case scenario. Most people are experiencing and starting to understand that. Well, not most people. Some people just think the cost of living's gone up. Everything's more expensive. They don't understand that it's their cash that's lost value. It's not that things have gotten more expensive. It's just that your cash isn't as valuable anymore. So it takes more cash to buy the same things. So that's investing in cash. Would I invest into cash? No. I keep some cash, but not much cash, because it's the worst asset that I can hold my wealth in. Second one is property. So with property by and large appreciates at 12% a year. It's always been the go-to for the entirety of my life. Investing into physical property has been what people do. Once you're starting to do okay and your mortgage is under control and you've got a few quid coming in, it's like you buy a second house. It's just a done thing. The problem with that is, I seen in 2008 the bad side of that, when it goes wrong. Problem with property is you need so much cash that you can't save. You can't use your savings to make the investment, because most people can't save 500 grand and buy a house for cash. Okay? So therefore you've got to get leverage, you've got to get debt, you've got to get a loan. Alright? Now once you take on leverage or debt or a loan, that means you've now amplified your risk, you've multiplied your risks. So when it comes to the property market, and even if you are just buying a property for cash, in Dublin you need 500 grand. So therefore you have 500 grand now at risk. In 2008, most of you guys watching this will have lived through 2008. In 2008, we've seen what happened when the property market turned again, people. Well, loads of retail people lost their ass. They lost their properties, and guess what? They lost the house they live in. And guess what? The bank still chase them to this day. They can't own anything because they still own the bank a load of money. So that's the risk of property, because there's such a high entry level. That means it's such a high risk to get into the asset class. Our third asset, I'm keeping this video short. Obviously, there's much more nuance that I'd like to get into, but I want to keep this short. Our third asset class we're going to talk about is Bitcoin. The beauty about Bitcoin, and why I really like it, is because Bitcoin is for everybody. The property market rules out most poor people, because they simply can't get. The bank manager's not going to give them $500,000. Bank manager's not going to give a poor person $500,000 to go and buy a property to try and get themselves out of their poor situation. Okay? The beauty about Bitcoin is you don't need $500,000. You can invest in Bitcoin. You can start investing if you have 1,000 quid, if you have 5 grand, if you have 20 grand. Okay? Now, your average man on the street or woman on the street will say, Bitcoin is risky. Do what everyone else does. Get into property. Alright? Your average man or woman on the street doesn't retire early, so I disregard everything they have to say. Alright? And it's simply, when you quantify the risk of investing in property is, if it goes wrong, you're 500 grand in the hole. If your Bitcoin investment goes wrong, alright, and this means that BlackRock are wrong, Larry Fink is wrong, Ray Dalio is wrong, Pollard Tudor Jones is wrong, Stan Druckenmiller's wrong. All of these legendary hedge fund managers, money managers, they're all wrong. They're all wrong as well because they've all made a Bitcoin bet. But if they're all wrong and I'm wrong and we're all wrong and the Bitcoin bet doesn't work out, how does it affect your life? Well, even if you invested 20 grand into Bitcoin, okay, it doesn't affect your life at all. If it was in your savings, you didn't have to take out any debt. You made a bet, you made a big swing, and it didn't work out, and you don't have the banks chasing you. You don't lose your house, okay? You don't end up in a divorce, all right? And this is the beauty of it. When you really, truly understand risk and risk management, because with Bitcoin you don't need as much capital because the returns are asymmetric. Bitcoin doesn't return 12% a year like property. Bitcoin is returning like some years 400% a year, okay? And then it's flat, 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 and then it does another 400% or 500%. All right, on average, Bitcoin's returning something like 150% a year. Over the last 3 years, through the bear market, Bitcoin's average return has been 50% a year. So it just, pardon my language, but it kicks the crap out of every other asset class. The price you pay is the volatility, and that's why your education is what gets you through the volatility. But the volatility, people think volatility is risk. Volatility isn't risk. Volatility is what actually makes you the money in the first place. So, I hope that video made a little bit of sense. With cash, you're guaranteed to lose your money. You're guaranteed to lose 50% every 10 years. So therefore, you should take 50% and do something with it because it's gone, okay? With property, you need a massive capital to get involved, so there's huge risk. If the property market blows up, you get caught short, okay? Watch, it's probably going to happen in the next couple of years. 3, Bitcoin. Bitcoin, you can actually take your savings, you can live below your means, you can accumulate the asset, you can buy 50 quid's worth of Bitcoin a month, and you're accumulating an asset that goes up in value over time. That's not guaranteed that it continues. That's why it's called investing, because whenever something is investing, there's risk. Whenever you're making money, there's risk. You can't make money without risk. It's how money works. Guys, I hope you got value. Hit the like button, and have a super awesome day. Dinny out. Any questions? Drop them below. Let me know which asset you're in. Bitcoin, property, cash.